Welcome to No Blueprint.
Okay.
So this is my third episode. It's been a minute since the last one, and I wanted to bring in a Beaufortonian, a legend here in this town.
Not too fast, but yeah. Mhm.
But yeah, so we've done a few different episodes now, and I really wanted to focus on the lending side of things. And I don't want this to be a stuffy conversation, as I mentioned before.
Mhm.
I want this to be really conversational and really focus on like a 30,000 foot view, because I think there's a lot of misconceptions out there about lending, about the process, and people are scared of it, and it can be a little painful along the way. So I just wanted to create this episode so that we can help people understand the process a little bit more. But before we get into all of that, do you want to just give a quick background on who you are?
Sure. Yeah. Been in Beaufort my whole life. My parents have been here forever, and my wife and I, who I met in high school, we
Mm-hmm.
moved to DC for a little bit. I was in sales there, and then we came back over COVID and wanted to give lending a shot. My dad's been a lender here for 30 years, so I know it's just more about showing up, answering the phone, do what you say you're going to do, like every other job. So we gave it a shot, and it's been great.
All right. Well, who do you work for?
Gateway Mortgage.
That's awesome. So
That's
you
right.
moved back here in 20.
2020. Yep.
Okay,
Right
2020.
before it got nuts here
Yeah,
with the real estate. So we kind of hit a sweet spot.
gotcha. And then tell people what you did before.
I was in the bagel business. We did wholesale bagels, catering sales. So I've basically been selling stuff my whole adult life
That's
is,
all.
is what I'm into.
What do you think you brought from that job into lending?
I think uh, the biggest point that I make is, we would have people that buy a $2 bagel, and then we'd have people that spent $20,000 on catering, and we treat those orders the same no matter what. And that's how we treat lending as well. If you want to buy $100,000 mobile home, we're going to treat that loan process and the client the same as $1 million purchase.
Gotcha.
So it's the same thing.
Cool. Well, let's jump into lending. Um, I think maybe let's talk about the process first, so just people understand the proper order of things, because I
Right.
think there's a lot of, yeah.
I tell people it's always fun to go on Zillow, and it's always fun to talk to realtors and go look at houses. But when when it gets tough for most borrowers is just to simply get on the phone with the money guy, with the lender, because then it gets real,
Mm-hmm.
and we go into your finances and we talk about your credit history, and sometimes that's good and sometimes that's bad, and that's the tough conversation for people.
Yeah.
But a lot of times people are approved for houses that they had no idea they could buy, and then that's a great part of the job, is to be able to provide that good news. And obviously we have to give some bad news
I was about to
sometimes.
say, what percentage is
but
the?
but I think the process, it's funny, it goes in reverse. So everybody gets on their phone, even when they already own a house, they go on Zillow and they scroll all night. Then they call a realtor, and then the realtor says, are you pre-approved? If you're not, reach out to the lender, and hopefully it's Gateway. And that's really in reverse order, because you should talk to a money guy first, see what you're pre-approved for, then talk to an agent, and then they can provide you with houses that fit your criteria.
And so I'll talk about it from the agent perspective, because, like you said, people scroll, then they call you, whether you know them or you don't.
Mm-hmm.
And then we always try, we ask that question. I know a lot of realtors that will not show a home, right?
Mm-hmm.
Unless they're pre-approved. And I totally get that, but some people just have it in their brain. They're like, well, maybe I don't even, I already own a home that I'm quote unquote happy with, but I'm
Mm-hmm.
always kind of shopping. So they don't want to, go through that process, it sounds like, with the lender, because then, to your point, it gets real. So I think, on the agent side of thing, it's a fine balancing act of like, okay, like, are you going to show this home? If I've never met them before, like, I feel like I'll always try to do it once, maybe twice at most, just to kind of build that rapport and that
Mm-hmm.
relationship. And then after that, I'm like, okay, like, I can't keep doing this. I mean, I know we've all heard the horror stories of like, oh
Yes.
yeah, and then we're looking at $500,000 homes, and then they're only approved for 175, and they didn't tell you about all this other debt that they
Mm-hmm.
somehow had.
Yeah, and the difference between us and the realtors is that, we do a lot of work that we don't get paid for, right? But
True.
the difference is I'm doing that at my desk. Y'all are driving around from house to house and probably picking up lunch and coffee, and that can really take up some time. If you don't know they're pre-approved and they can actually buy the houses that you're looking at, it's all for none, really.
Yeah. I'm
So,
running through my head right now. I'm just imagining like me like grabbing coffee and like eating in my car real quick in between
yes, that's
showings like
right.
a crazy person.
That's right.
People don't get to see that part. Maybe I should post my Jimmy Johns all over my
Yeah.
car. Awesome. So the real process is, if they are shopping, you would hope that they've already spoken to their lender and
Mm-hmm.
that they know what their buying power is. So then they reach out to me about a house or about house shopping in general. We kind of have parameters that we're working in. Um, and all right, so let's also go to the next step real quick. So after, let's say, we get the house under contract, and we're going to talk about products a little bit later. So let's make sure we table that. But I just want to finish the process. So after we get it under contract, sometimes I think that's almost the hardest part is,
Yeah.
yeah.
Honestly, once we get a contract, that's when, once you're in the system, once we talk to a borrower, like if you send somebody to me, you prep me a little bit on their background, that also gives me an idea of how to handle, people are different. So I can't come hot out the gate with with some people. So it gives us a little background from the realtor, which is great. And then the pre-approval process and the way we do it is we take our time and make sure it's good. So some pre-approvals are worth nothing but the piece of paper that they're on.
I was about to say differentiate between the two.
Well, you have a pre-approval and a pre-qual, but really it's all the same down here. But technically, the pre-approval means you've already been through underwriting and somebody has verified your income and assets. But typically we do pre-quals, which means we pulled your credit, we've looked at everything, but we might not have gotten very deep into your situation. But what we try to do is make sure that the pre-approval we send you is solid, so there is no disappointment on the buyer or agent down the road. But that's the hard part. Once you get under contract, then a lot of it is just getting the paperwork in and pushing it through the channels that need to be done, go through, and that's it.
Yeah.
But it is a little hectic because on y'all side, you have the earnest money, you have the inspections, and everything is really fast in the beginning, and then it just kind of smooths out for a while.
I know it's funny. Clients will be like, "Is everything good?" And I'm like, "Yes." Like we've gotten through the due diligence period, and now we're just essentially waiting for the appraisal side of things. So I'm going to give a shout out to this, especially for first time home buyers. Is it might feel painful here in the beginning because you're collecting like bank statements, like your underwriters are going through like Venmo and Zelle charges, just trying to understand, right, your income and your expenses to make sure, okay, this person can truly afford this, right?
That's right. And I think the biggest misconception from borrowers is that we're trying to find a problem. We are not, believe me, we are not trying to find a problem. We're just trying to make sure that everything you send us makes sense, and that when we present it to the underwriter, they can look through it as smooth as possible, and we try to prepare them. We try to prepare the file as clean as possible so the underwriter can just fly right through it, and that makes everything a lot faster.
I'll shout out Mike for a second because, I used him. You weren't like trying hard, but you were like, hey, like, who is this new person in town?
Yes.
Like,
yeah.
Why
Who's
are you
this guy
friends
with
with
all
all
my
my
friends?
friends, but I don't know who you are.
That's right.
But anyways, we were buying a home ourselves, and we were struggling because I did not have 2 years of income at that point. And I was like, well, let me try Mike a little and see if like he has a solution, because no one else seemed to have a solution. And then you brought the solution, which is honestly pretty simple.
Yeah, I think the biggest part of our job, besides answering the phone, is problem solving. Of course, like every industry, you have your layup loans. You have the ones that are nice and clean, and you don't really have to do a lot. But then you have other ones that take a lot of work, and it's just really about problem solving. And that's where a relationship with the agent comes in too, because y'all are also trying to get the deal done. So then it's like a collaboration there.
Yep.
And to also not scare the borrower at the same time and the seller. So
yeah. And another thing I was just so impressed with is, I've just worked with other lenders, and I felt like I was sending the same documents 3 or 4
Yeah.
different times. And
Mhm.
I'm just like, I've already sent this to you. And I was just getting frustrated because it just felt like they just were being lazy, if I'm being honest. And
Yeah.
so I don't know. And I know you told me you're like, I always check everything, all our messages, all our emails.
Mhm.
I just triple check. You know, I think a lot of people are just like, oh, let me just send them this email and ask for this
I
document.
mean, everybody's busy. I mean,
Yeah.
it doesn't matter what your profession is or how many kids you have. If you don't have kids, it's all relative, but you're busy. And so to have to resend a document in this generation is annoying, frankly. It's frustrating, it's annoying.
Yeah.
And then you're like, well, what is this guy doing? If you miss the fact that I sent him this bank statement last week, what else is he missing? So
Mm-hmm.
we have a great team. We have processor that's awesome. She's also local, Nikki, and then Jacqueline, who lives in Bluffton. She's like my right hand man that kind of keeps me in line and keeps keeps everything organized for me. So that
Shout
allows us
out
to be
Jacqueline.
successful.
Do
Yeah,
y'all have in-house underwriters, or
yeah.
because I know there's different, there could be a broker,
Mm-hmm.
some use in-house underwriters, some don't. So I would love to kind of just break that down for a
Yeah, so
second.
we're actually a mortgage company that started in Oklahoma, and the owner of it is the current governor of Oklahoma right now.
Oh,
And he started it, and his whole motto was, we're going to close loans in 21 days. Everybody's going to get paid a little less, and we're going to have more people working to close loans fast. And so we were successful as a mortgage company, and then we bought a bank to allow us to hold on to more loans, offer more products like construction loans and things like that. So I could call our head underwriter right now. I could call the vice president right now. I call everybody. So we have the ability to get things done very fast and very efficiently and get answers quickly. Where if you use companies in Ohio that just has some guy in a cubicle, he's not dialed in like we are. And frankly, those guys don't get paid what we get paid, so they're not as
motivated.
in tune. And also, being in a small town that I'm from, I mean, if I screw up a deal with you and I see you at Publix, a day later, that's very awkward. So we have we have a reputation to uphold in
Yeah.
town and professionally. So that means a lot for us to have all the tools and everybody behind us to get loans closed on time.
Yeah. Awesome. Well, let's jump into anything else you think we should cover around like the process.
I would say I think the biggest problem is that people disqualify themselves from buying a house. Right? I think we all know that we're the best lawyers when we're talking to ourselves. We can persuade ourselves to do things, and I think people can say to themselves like, I can't buy a house, there's no way.
Mm-hmm.
And we always say, let us disqualify you, don't
Yeah.
disqualify yourself. So
Yeah, that's fair. What's some just quick tidbits about things you should not maybe do when you're getting ready to buy a house?
do not take mattress money and put it in your bank account. That's what we always say. So the thing about bank statements, the reason we collect those is we want to make sure that you didn't go out and borrow money from somebody with a 12% interest rate, on a private loan or something like that. So we're
Gotcha.
trying to source it.
Um, and then it's like, so I guess what they're trying to see, right? Are there any like red flags that
Yes.
come up? Like,
Mhm.
a lot of extra money. Did you go buy a new car like that week, and,
Yeah.
you know, extra your debt to income, right?
Mm-hmm.
So can you explain debt to income?
Yeah. So when you try to buy a house or you try to get a loan, we look at four things. We look at the credit, which a lot of people say they think their credit's in the tank when really it's not. Um, there is such thing where bad credit is better than no credit. That is a true statement.
Mm-hmm.
So if you have a 640 credit score, that's better than you having no credit.
Mm-hmm.
So that's one part of it. Your debt to income ratio, you take your monthly income, your gross income. We can't go off net or nobody would be able to buy a house.
100%.
So we go off your gross income, and then we go off your debts that your credit was required for. So like car payments, student loans, credit cards. And then we look at your down payment. And
Mm-hmm.
those are the three major things that we go through. And I think that a lot of people just get wrapped up. They start Googling things. They don't understand what they're Googling. And then they're like, there's no way I can be approved for this house.
Mm-hmm.
But we have programs for everybody's situation, for down payment situations, debt to income, credit. We have
Yeah.
everything.
Well, let's talk about a few of the programs. I definitely want to call out the SC Housing Works and stuff like
Yeah.
that as well. So, because I think a huge misconception, especially for first-time home buyers, is they think you have to put 20% down. But the only reason you're putting 20% down is to get rid of PMI, right?
Right.
Private mortgage insurance.
Correct. Most people do not put 20% down, and it is shocking how many people think that you have to put 20% down. I mean, even people that have bought multiple houses, they still think you have to put 20%. The minimum down payment is 3% for most loans, for conventional loans and government loans. But we have 0% down. We have SC housing is for first-time home buyers, which does not really mean first-time home buyer. It just means you can't own a home at the time of closing.
Yep.
So I think that's another example of people hearing things and not understanding exactly what it means, and then just saying, all right, well, I'm out.
Yeah, like FHA, people think that's only for first-time home buyers, but same.
Yeah, huge stigma with FHA. I mean, it drives me crazy that has some stigma against it. Like, FHA requires only 3.5% down. It has lower credit threshold. It has higher debt to income threshold. So it's just a more forgiving loan. And that doesn't mean that the borrower is not qualified, right? It just means that that's the loan that they want to go with for their particular situation at that time.
Yeah.
So it's our job to take the information, take the loan application, and then put you in the programs that fit you best.
So, and I know you're gonna have to probably correct me on this, but it's like FHA and SC Housing Works. And by the way, we apologize because apparently the landscapers decided to come and work out at this house right now.
Yeah,
so you see our eyes wonder is because people are outside. So hopefully these microphones do their jobs.
Yeah,
and
yeah, they are storming in quickly too.
Well, this is part of the fun journey of this. But with FHA and SC Housing Works,
do you want to move in another
no,
room?
we're just going to go with it because I think the microphones will be good. But I'm not cutting this out, by the way, because I think this is just going to be great.
Perfect. Yeah.
So, it's like, you can't purchase a house that's over what, $450,000.
So the SC Housing, we're a certified lender with the state, and the state is trying to make housing more affordable, and they have some incredible programs. You can do down payment assistance, you can do all your regular loans, but under SC Housing. So conventional, VA, FHA, USDA, and what they do is they just put a couple requirements there to make sure that you're not, turning these houses into Airbnbs or whatnot. So they have, you can't own a home at closing, you can't make more than $130,000 household income. So even if your spouse isn't on the loan, they still look at or their income. And then you also have debt to income ratios, which need to be slightly lower than a standard loan. So
the weed eater is literally right outside the window right now. All right, cool. So it sounds like that's a perk of Gateway, is that y'all are part of that SC Housing program. And y'all can do, it sounds like, VA, FHA, conventional, construction. Do y'all do land?
We do land. Now, land, we get a lot of calls about land because people, they say, oh, I don't see a house I like, so I'm going to buy land and build on it. And unfortunately, we have to break the news to them that a lot loan, a land loan, is the highest risk in lending, because if the world goes to hell in a handbasket, that lot you own across town is the last bill you're going to pay.
Yeah.
So we do have lot loans, but they are designed to give you time to get your construction documents together and then roll it into a construction loan. And you can get a construction loan with 5% down.
Okay. Oh, really?
Yeah, but building houses is expensive.
Yeah. So, I mean, I know builders, they're starting out at $350 to $400 a square foot, because I think a lot of people, I'll have out of town people that come here and then they don't find what they like, and then they want to go down that route. Try to give them the heads up, break the bad news to them that it's just pretty expensive.
It is. And to borrow money to do that is even more expensive.
So, all right. So we were kind of talking about the different programs that you guys offer. let's talk a little bit about agent lender
Mm-hmm.
relationships. I think we touched on it a little bit in the beginning, but what can we do to help tee things up for you guys? Like if we have someone, like, do you just recommend starting a group text message
Group texts
immediately?
are the best, mainly to cover our butts, because then I'll say, hey, if they haven't filled out the application, instead of you thinking that I'm slacking, I can say, hey, do you have any questions about the application, the link that I sent you that you haven't filled out? It gives me an opportunity to give you updates throughout the process. But I think the relationship is more important in the education of the lender. So the lender, we can provide y'all with education to help you be more efficient with your first time meeting with the client, right? So like if this guy says I started a plumbing company 6 months ago, well, he can't buy a house
Right.
because you have to
Show 2
have
years.
2 years of tax
Yeah,
returns.
exactly.
Right.
But yeah, I think that's important too. 2 years of tax returns, not just 2 years of working.
Right.
You need to show 2 years. I mean, that's definitely gonna be on the mic. This is right here.
I feel like you're about to come through the wall.
I had my next question, and then that totally just like threw me.
Well,
for
it's 2 years of tax returns. There are always exceptions to the rule, but I think when you're meeting a client for the first time, those are important things that you can kind of sneak in there and just be like, okay, well, what about your down payment situation? Do you have money for a down payment? To try to have an idea of really a realistic timeline for when these people are going to be able to buy a house. And I
Right.
think answering or asking just small questions of being educated about typical programs, it would allow you to be more efficient with your initial meeting.
Right. All right, I'm gonna hop here real quick because this is totally throwing me off right now, and figure out the question that one. Oh, let's talk about the market, the mortgage market. So I know there's been it's kind of funny because a lot of people are like, oh, like there's about to be a rate cut, but it's funny, like you'll see interest rates actually go up and don't realize that you actually are getting the cut leading up to it.
Yes.
So let's talk about what they've the height was 8% a year and a half ago, 2 years ago.
I've tried to block those times out of my, just like I'm trying to block out the guy with the blower. I've tried to block out those rates in my life. But yeah, I mean, the rates were high for a while and they have slowly come down. But the problem is people, again, they Google rate cuts and what are the rates going to do. And so, like, for instance, they had a rate cut yesterday, but our pricing got worse.
Right.
Because but our pricing has been great leading up to it because we've already anticipated the cut.
100%.
So they package these loans into bonds and they sell the bond, right? So when the rate is cut, they sell off the bonds.
Mm-hmm.
And so now the rates are coming back up because the bond value is down. So there's a lot to it that buyers aren't paying attention to. And
right.
And the biggest thing is when they say they cut it 20 or
oh yeah, let's talk about basis points.
20, it's basis points. And so it's not, if they cut the rates 20 or a quarter and they went from 6.25% to 6%, that would be huge. But they're really cutting it 25 basis points. Mm-hmm. And 100 basis points is, like, it's hard to explain. Honestly, it's a waste of time to try to explain.
Yeah, I was about to say, but just leave it there.
Yeah,
ChatGPT.
But the basis points are what dictate the rate, the pricing, and we go off the 10-year bond rate. And in my opinion, it's like if you want to buy a house and you're really thinking about buying a house, the rate going from 6.5 to 6.375. That $25 a month is not good. If that is make or breaking your house, you shouldn't be buying a house.
Yeah, 100%.
And refinancing, people, we all went through that marry the house, date the rate thing or whatever. And it was true to some extent. But, refinancing is not some financially crippling thing that you go through. It's sometimes the necessary evil. And we are regulated by the government. We cannot refinance you if it's not a smart decision.
Right.
So so if you refinance and it costs you $2,000, but you're saving $200 a month, that break even point is 10 months, and that would make sense to do.
So I was just going to talk to you about Lord Jesus. Hopefully it'll go right here and just get out of the way. let's talk about like 2-1 buy down points, because I think that's really interesting. As I have a lot of clients that they're like, oh well, you think we can get $10,000 more off on the house, or come in 10,000 under asking. And my suggestion is like, hey, let's like focus on the 2-1 buy down or something like that,
Yeah.
because let's compact that. Instead of over 30 years of a standard loan, we can get it all up front in 2 years. So I'm gonna let you explain.
So
the
it's called a 2-to-1 temporary buy down. That was developed to help sellers sell their houses faster. Because, for instance, if you're in a house, $400,000 house, and you lower it to $390,000, that's only helping your buyer out with like maybe $40 a month. Okay, which is a lot of money, but it's not as significant as they would think. But if you say I'm going to pay $11,000 for your 2-to-1 buy down, well, that borrower is saving $11,000 over the first 2 years. And the way it works is, if your rate's 7%, then the first 2 years, that's where the 2 comes from, it goes to 5%. Then the next year it's 1, so it goes to 6%. And then after that, it just stays at 7%. But people think that it's an adjustable rate mortgage, which is how the market crashed and all that in 2008. It's not an adjustable rate. It's a temporary buy down. So you're just buying down the rate. We're taking that $11,000. We're subsidizing your payment every month, and that's all there is to it.
So
much more impactful.
Yeah. So for like a $400,000 home, how much is a 2-1 buy down?
Probably $11,000.
Yeah. So what we're essentially saying is, instead of hey, we're going to make an offer on this home that's asking price is $400,000. Instead of trying to say, hey, let's offer $390,000, we're going to offer $400,000. But then we're going to ask for seller credits of $10,000 or $11,000. And the seller, it doesn't matter to the seller, because they're netting out the same.
Correct.
At the end of the day.
Correct. And if you go from 7 to 5%, that's significant savings.
Yeah. How much? Can you explain how much that probably would be?
It's probably $400 or $500.
Yeah. Each percentage point, or
no, that every month of what you're saving.
Right. So I guess my question is, from 7% to 5%, is that dropping like $500 a month, and then the second year will be like $250?
Correct.
And then
over those 2 years, you're going to save exactly what you paid for it.
Yeah.
So you can do the math that way. But so buying down the rate permanently, we do not recommend that in a market like this, because let's say the rate's 6.5% and you spend $7,000 to buy it down to 6%. Well, it's going to take you 80 months to make up that money. And then what if the rates go to 5%? Well, then you're going to want to refi, and you've already dumped that money away. So that's why the temporary buy down was so enticing, because you were able to kind of get ahead of it, have the lower rate, and then if the rates stay the same, fine, you're where you're at. But if they go down, then you have the opportunity to get out of that temporary buy down.
Yeah, and if you want to refinance during it, the money that you didn't use, does that just go?
It goes back to principal. Yeah.
So it's like you're not losing no matter what.
If you have money in the bank, you can also buy them yourselves. You can purchase the 2-to-1 buy down yourself. So anybody that has funds in the bank, I always recommend that, because it's risk free.
Yeah.
And we also have an extended rate program, which is also risk free, where let's say you're closing, November 30th, we can lock you in for 90 days. And give you a chance one time before you close to float it down to the rate. So if we lock you in at 6.5, you're sitting at 6.5, and then November 20th, 10 days before you close, the rate's 6.375. We get an opportunity to break that original lock and float it down to 6.375.
How much does an extended rate usually run you?
It doesn't charge you anything. They do ask for a deposit, half a point deposit.
Okay, gotcha.
A discount point is 1% of the loan amount.
Okay. So. All right, cool. And can you do that on personal and investment properties? Is it?
Yes, I think they have them, just not on refinances.
Okay, gotcha. And actually, to hop to that for a quick second, I feel like a lot of the products that we're talking about are all for primary homes, right?
No, you can most programs you can do for any property, but condos are always their own animal. Condos and investment properties.
Well, I guess FHA and VA and stuff like
Government loans are always for your primary residence.
Yeah, gotcha. And then if you want to do investment, then typically you have to put down that's when the 20.
You can put down less than 20, but it's not. I would not recommend it to anybody. We always say 25%, but you can do 20. But 25% is what moves the needle and makes it worthwhile.
Yeah.
We also have DSCR loans that everybody
yeah.
gets on Instagram and reads about. Those are a good program if you qualify for it, but it's not as simple as they make it seem on TikTok.
I was about to say, don't you just love when someone calls you and be like, so I saw this thing on the ticker talker.
I love it. It's my favorite thing because I just love to crush those people.
You should start your own TikTok, Mike.
No, I like to troll the comment section on all the Instagram real estate guys.
This man will troll you.
I do. Because I can see their numbers. I know they don't do any business.
Yeah.
So,
and I think that's the funny part. And like, I'm trying to get better about social media because I know that's where a lot of things are. But man, the misconceptions and the people pretending like they're doing the business that they're doing. I feel like I'm not on it because I'm busy. I'm actually doing stuff.
And honestly, we just had a conversation with my company wants me to do social media, and I'm like, man, first of all, nobody wants to see this, and second, I mean, nobody cares what the lender has to say. We're here for the realtors, right? And we're here to support our realtors and make sure that your clients are getting treated with the best quality service. That's what we're here for. And personally, I just dig in with my group of realtors, and that's it. I don't call a million people every day and do one deal with this person and never talk to them again. I just dig in with the people that I have a good relationship with, and it allows me to give them even better service. So social media is not something that I'm very interested in at all.
Yeah, well, it's funny that you mentioned that, and I don't know if you know this, but I actually hired a virtual assistant to kind of help me because I also have a property management business, hence this house that I manage in Beaufort that we're sitting in right now. But I've gotten to where, I mean, she's $7 an hour. Like, I'm helping her out, and I mean, she's the one. I just sent her a bunch of stuff and all the links for the houses, and she's the one creating the weekly. I'm not sure if you've seen the weekly guides for Beaufort and talking about the different houses and stuff.
Let me tell you, I can tell you immediately when it's a virtual assistant for the realtors because they do not play around.
Yeah.
They are so much more organized because that's what they're doing.
Yeah.
It's different than the TCs at most places are great. The transaction coordinators, they're great, but I know them. And so once they start doing business with us, they know what I need, and it's not a lot of fluff. But those virtual assistants, it's like, I need this deadline, boom, 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 because they're like robots.
100%.
They're not like dealing with 100 people.
They're not scared if they're going to hurt anybody's feelings or ask too many questions or whatever. Yep. It's like, we use this AI chatbot thing or whatever in our database for a little bit, and it was funny. Like, I felt awkward watching some of the conversations. I was like, oh my God. When like we should probably be pushing a little bit harder with things. They're like, I don't want to make them upset. But anyways, I feel like that's how the virtual assistants are. They're like, I don't care.
Yeah, they don't care.
But I mean, they're great to work with, and honestly, they keep you so organized. Yeah. And I've been like, everyone I meet with, they're like, well, how are you doing things? Blah blah blah. I'm like, hire someone. They can help you out for 5 hours a week. That's $35.
This is kind of relatable, but in our business, I'm the salesman. Like the loan officer is the salesman, and it all comes back to us. But really, the people doing I have the hard conversations, but the people that are doing the hard work are Jacqueline and Nikki, who are keeping all the stuff that I send them organized. Yep. And then obviously probably calling me names in the background, but see, they couldn't do what I do, and I can't do what they do.
100%.
And that's the difference. And everybody has roles.
Yeah, front end and back end team. That's right. Shout out also to our transaction coordinators, our listing coordinators, and virtual assistants for the Greco group. They've been awesome with that. So awesome. Well, anything else? I feel like we're at a good high level point. Anything else that we need to kind of click on?
Pay your bills on time so you have good credit.
Yeah.
Credit does help. It's not the most important thing, but it definitely helps. And just don't disqualify yourself. And get on. I tell people, if you're even thinking about buying a house in a year or two, you should just get on the phone with us. We'll give you a plan. We'll give you things to think about. And more importantly, we'll look at your credit. Most people don't look at their credit report. They use credit monitoring apps
Mm-hmm.
like Experian and Equifax,
Yeah.
but they're not looking at what's on their credit report and how it's being impacted. And then we can fix your credit. We can run reports to immediately boost your credit. That's a big tool that we use, and it's
Yes.
free.
I want to, yeah. All right. So yeah, let's touch on that and then we'll close it up is, um, what I try to tell people when they're just like nervous or they don't understand and everything is like, well, I don't want to hurt my credit with them like running all of that. So I want to touch on that. And then also for the people that maybe actually do have bad credit and they need to get it up, I introduce them to you to be like, hey, they can actually tell you where you can make a difference and actually build a plan for you. Whether, my friend I introduced you to that we chatted with maybe a month or two ago. I mean, I think she's a little bit out from like buying a home, but, she's trying to build up her credit and everything. I was like, look, he's just going to be able to give you a snapshot of everything and help you build a strategy, whether you end up buying a home or not. You know what I mean? Like there's no sweat off your back.
And I think this is from personal experience too. I mean, if you in your mind don't feel as happy with your financial situation, right? And so you're timid to talk to a guy that's going to dive into all of it. But I'm going to get all up in your finances, right? And my job is to make them feel like this is okay. This is part of the process. Like this is what you need to do. And I can tell you again from experience, it's immediate relief. No matter how bad the situation is.
Right.
Once we all have demons, we all have things that we just push down, right?
Yeah.
But once somebody pulls your credit and we go over everything and we give you like, all right, now the ball's in your court. This is what you need to do to get where you want to be. It's immediate relief. Like, okay, all right, well, now I know like this is what my credit is and this is how bad it is. And now I have something to work towards. But if you never talk to a financial guy, you never talk to a lender to look at everything, you're just kind of thinking the worst all the time.
Well, I feel like you're also a great intro of like maybe they don't want to commit to like a financial advisor.
Yeah.
And kind of go like that full route. But I feel like you're kind of like that first conversation to kind of rip the Band-Aid a little bit. And like you said, it's a big relief. And then it's like working out. You always feel better once you've done it.
That's true.
And then so working out and lending, the same thing.
Right? Well, yeah, we do. I really do pride myself because when I was in the bagel business, we dealt with all kinds of people. I mean, everybody, and people are different. And I feel like my best skill, honestly, is being able to tailor my conversations to different people. And we get a lot of business. Like when somebody calls me, my goal is to make sure they never call another lender. And we're pretty successful with that. But we get a lot of people that like, I talked to so-and-so and it was just an awful conversation. I mean, they didn't even get into the finances. They just flat out didn't like the person. And so I think that's part of our business is you buy stuff from people you like. And I think us being on the phone and like talking people off the ledge with their finances or getting them inspired to buy a home is our biggest skill.
Really. I love our lunches because we'll maybe talk about work for 5% of it, and we'll kind of like intertwine it like randomly there, and then then we'll just go on something else. So
that's the last thing I want to talk about is rates and that's the last thing I want to talk about. Turn you on. They do not. It's definitely the last thing my wife wants to hear is rates in the market. So
shout out Allie.
That's right.
Awesome. All right, well, we'll wrap it up here, and appreciate you, Mike.
Yeah, thank you for having me. I appreciate it.